everyone, welcome back to the Advisory Desk. Today we are covering 4 stocks on Bursa Malaysia across 2 industry, consumer product and services, and healthcare. Using a year of data from 60 June 2025 to 50 June 2026. Quick market context first. The FBM KLCI hit a bottom around -1.18% in August 2025, then climbed steadily with higher highs and higher lows, peaking at 16.58% by end of January 2026. After that, it went into consolidation, some pullbacks from March to June 2026, but nothing that broke the primary trend line. By the cut-off date, it set at 11.05%, so overall a generally bullish year for the broader market. Now the sector told a different story. Consumer products and services rode the market up to 40% by January 2026, but then flipped hard into a downtrend, ending nearly flat at -0.44% by June, a massive divergence from the market. Healthcare had it worse, a several downtrend down to 27% by March 2026, a partial recovery to around 12.5% by May, then renewed selling, closing the period at 20.36%, while the KLCI stayed positive. Keep both of these in mind as we go through the individual counters. First up on today's show, Nestlé Malaysia. Auni, thanks for joining us. Auni, before we get into the technical, for anyone who doesn't already know the company, can you give us a quick background on Nestlé Malaysia?
For sure, Nestlé Malaysia is one of the country's leading food and beverage manufacturers, trading under stock code 4707. Its root is actually go back to 1912. It moved to KL in 1939, set up its first factory in Petaling Jaya in 1962, and leased on what's now Bursa Malaysia in December 1989 at an offer price of RM 5.20, which climbed all the way to RM 21 by 2000. Today, it runs 6 factories, employs over 5,000 people, and makes more than 500 halal certificate products under name like Milo, Maggi, Nescafe, and KitKat.
Okay, so a generally established name, how's the stock actually perform against the market over our study period?
Nestle returned about 26.62%, way ahead of the FBMK LCI, plus 11.86%. Both move in the same general direction, rising together into January 2026, then correcting. But Nestle's swings were much sharper. As it peaks, it was up as much as 65 to 70% versus the index plus 20%. That tells us Nestle carries higher beta, biggest gain on the way up but biggest drop on the way down too.
Bigger swings both ways. Noted. So what does the actual trend look like using Dow theory?
The primary trend is actually a downtrend from a height of around RM 122 to RM 125 in January 2026, sliding down to about RM 90 by June 2026. Before that though, there was a strong uptrend from July to December 2025, running from RM 70 up to RM 120. Within the current downtrend, there was also a secondary counter-trend rally between April and May 2026, pushing price back up to around RM 108, but it failed to hold above the primary trend line, and price fell again. So that rally was just a reaction, not a genuine reversal.
You mentioned a gap earlier when we were preparing this. Walk us through that.
Right, there are runaway gap, also called a continuation gap, that are formed between late February and early March 2026. It's called runaway because it appears mid-trend, not at the start of a new one. After the gap, price keep falling from RM 108 to about 100 by April, confirming it was fuel for continued selling, not a reversal signal.
Let's get into the overlays. Moving average and Bollinger Bands. What are they telling us?
On the SMAs, we saw a golden cross around September 2025, confirming the uptrend, followed by a death cross around February 2026, confirming this shift into a downtrend. Right now, priced at RM 91.18 is below both the 21-day SMA at RM 95.42 and the 50 days SMA at RM 98.32, both still trending down. Bollinger Band tell a similar story. Price rode the upper band during the uptrend from September to November 2025, then rode the lower band during the downtrend from February to April 2026. From May into June, the band started contracting, which usually signal low volatility right before a breakout. Right now, price at RM 91.80 is near the lower band at RM 90.44 and below the middle band at RM 95.21.
Interesting. So is that contraction hinting at something? What are MACD and RSI showing?
This is where it gets more interesting actually. MACD crossed above its signal line back in August, September 2025, kicking off the bullish run, then flipped bearish around November to December 2025 and stayed negative through the whole downtrend. But the most recent crossover has MACD back above the signal line, negative 1.41 versus negative 1.64, with the histogram turning positive at 0.230. That's an early bullish signal, even though we are technically still in bearish territory overall. RSI hit around 80 overbought back in November 2025, right before the top. It fell through the whole downtrend. From July 2025 to February 2026, OBV was in a steady uptrend, confirming the price rise was backed by real buying. But from March 2026 onward, OBV started falling even while price was range bound, a sign of distribution, meaning selling pressure was quietly building. In June 2026 alone, OBV dropped sharply from about 20 million to 19.32 million.
Okay, so pulling all of that together, what's the final call honestly?
MACD is bullish. RSI is a natural and recovering. Bollinger Band show reduced volatility, but the SMAs are bearish with the death cross still active, and OBV is bearish too with that sharp June drop. Genuinely mixed picture. So our verdict is hold. If you already own it, don't panic. But if you are thinking to enter in fresh, wait for the confirmed breakout above RM 95.42 with rising volume before calling it a buy. If RM 90 support breaks down instead, that confirms the downtrend is continuing.
Great breakdown. Thanks, Auni. Next up, we are staying in the consumer sector, but the story flips. Nabila's here to talk about Fraser and NIF, and spoiler, it's not as balanced a picture. Nabila, give us the background on FNN first. Who are they?
Okay, thank you for inviting me to this podcast. Okay, for the introduction of FNN, so FNN is a Malaysian oldest food and beverage names, founded in 1883 by John Fraser and David Chalmers Neef. It is a fully halal compliance, generates over 5 billion in annual revenue, employs more than 3,800 employee, and export to over 75 countries including Brunei, Thailand and Indochina. So you'll know the brands even without the knowing the company, such as they have produced 100 plus, Oishi tea and green tea and Ice Mountain water and teapot and so on. So
strong reputation on paper, but you say the stock story is different. How different are we talking?
It is very different because the FBMK LCI shows a gain a solid of 11.87% over the period, driven mostly by big banks and platform names F&N went to opposite direction. It's a high point early on. They went through a long, heavy downward slide, bottoming at a RM25 ringgit 50 cent by the end of the timeline. By far the weakest performer of our four counters today.
Ouch! What does Dow theory tell us about the trend structure here?
So the Dow trend clearly stated a primary downtrend. The stock peaked between RM26 and RM36 ringgit and 36 ringgit and 50 cents around December 2025 to January 2026, and from here the seller took full control. Continuously lower highs and continuously lower lows. There was a secondary counter trend rally between April and May 2035 that pushed the price up to RM31 ringgit and 50 cents. So, but it hit a resistance and fell, breaking down below the RM29 and 70 ringgits. Support floor and dropping to low RM25 ringgit and 50 cents in June. Right at the very end of the timeline, there was actually a sharp V-shaped bounce back up to RM29 ringgit and 70 cents, which is now testing that old downtrend, worth watching but not confirmed yet.
You mentioned a double top pattern earlier. Can you break that down for us?
April and May rally, the price tried twice to break down above RM31 ringgit and 50 cents and fell both times. Forming two peaks side by side, what confirmed this pattern is the volume itself. The second peak has noticeably lower volume than the first, a clear sign buyers were running out of steam. The neckline connecting the bottom of those two peaks set at RM29 ringgit 70 cents. Once at the neckline broke, seller took full control and took a solid and the stock slid all the way down to RM25 ringgit and 50 cents.
Okay, and the moving average and bands, same bearish story?
Yep, the consistent all the way through. The 21-day SMA crossed below the 50-day earlier in the period. It's called a death cross, and it has held a strong ceiling ever since. By the end of Thailand, the 21-day set at RM28 ringgit and 12 cents, and the 50-day set at RM28 ringgit 58 cents, with the price finishing with below both. Reserve Bank paint the same picture because the price rode the lower band consistently throughout the downtrend, a classic sign of an aggressive sustained sell-off. By June 2026, the upper band was at RM29 ringgit and 81 cents. The middle was at RM28 ringgit 24 cents. The lower band at the RM25 ringgit and 40 cents. And the price finished right near the bottom band and its period low of RM25 ringgit and 50 cents.
What about volume and the oscillator? Any silver lining at all?
Honestly, not much, because the overview dropped steadily throughout the downtrend, showing a large volume flowing out as investors sold. Towards the end of the flattened out, but flattening at a low point, bouncing isn't a bullish. It just means that a heavy selling pause, not that buyers step in. MACD and RSI both confirm the same conclusion. MACD stayed deep in the negative territory below its signal line, bottoming at negative 0.200. Meanwhile, the RSI crashed down to an oversold reading at near 22 near the end. Normally, at the RSI, that low might tempt bargain hunter, but because MACD never crossed back upward, the seller pressure was still very much alive.
No ambiguity here at all. What's the final verdict?
So to give a clear cut, it was a sell. Every single indicator, moving average, Bollinger Band, OBV, and even your MACD is pointing the same bearish direction. If you're holding this stock, we recommend to trimming exposure. If you want back in, eventually wait for a confirmed breakout above the RM28 and 12 cents and RM28 ringgit 58 cents with a significant jump in volume. That will be the signal needed to upgrade to a hold or even a buy. If the RM25 ringgit 50 cents support break instead, expect the downtrend extend to go further.
Okay. Thanks, Nabila. Top one but clear takeaway. Alright, good news. The next two counter as both from the healthcare sector. And the story picks up from here. Afika, welcome. Tell us about KPJ Healthcare. Afika, let's start with who KPJ actually is.
Thank you, Bella. So, for the KPJ Healthcare, stock code is 5878. Is one of the biggest private healthcare providers in Malaysia, running a network of specialist hospital and health center offering everything from specialist treatment to surgery to emergency care. With Malaysian population growing, aging and becoming more health conscious, KPJ's been steadily expanding to consolidate its position in the industry.
How has the stock actually performed against the benchmark?
KPJ gained 6.73% over our study period, while the FBMKLCI gained 8.80%. So, KPJ actually underperformed the benchmark by about 2 percentage points. It also showed high volatility than the index, especially after March 2026. With sharper price swings before eventually covering. So, a positive but not spectacular returns, investors technically would have done slightly better just holding the index. That said, the recent recovery does hint at improving investor confidence, assuming the company keeps delivering stable financials.
So underperforming on paper, but you said the chart tells a more constructive story.
Right. The price pattern is actually quite healthy. The stock has respected a primary bullish trend line throughout the period, forming a series of high lows. They were pulled back along the way around September 2025, November 2025, and a recent one in May 2026. But these were temporary corrections, not trend changes, and each one resolved with a breakout back about the correction line before price resumed climbing. Right now, it is another corrective pace, but it is still trading close to that primary bullish trend line, which is acting as an important support zone.
You mentioned a falling wedge pattern earlier too. What's that about?
That formed from around October to December 2025 following a prior bearish trend. It's built from two downward sloping trend lines covering together, with price making lower high and lower low in a lowering range. Both the resistance and support lines here got multiple confirmed touches with strengthened the pattern's stability. After the breakout, price keep climbing above the ascending support line, eventually approaching horizontal resistance around RM2.8 to RM2.85. And when it finally broke that level, it saw on a significant volume increase, confirming it as a journey breakout. From there, the stock entered a fresh uptrend with higher high and higher low, backed by strong volume the whole way.
Okay, so where does that leave the stock right now on the overlay?
Okay, so for the overlay, Bollinger Band show price trading near the middle band at RM3.17 sideways. Action after that, early strong uptrend with the upper band at RM3.42 and lower band at RM3.05. The band have started narrowing, which usually signal the stock is gearing up for its next significant move. For the moving average, shows some short-term weakness though. Price at RM3.17 is slightly below both the 21-day SMA at RM3.19 and the 50-day SMA at RM3.25. And the 21-day is also below the 50-day, pointing to very short-term momentum. That said, price is trading close enough to the 21-day SMA that it could act as near-term resistance to watch.
And the oscillators, MACD, RSI, Williams.
Okay, next is oscillator. First is MACD, is showing weak bearish momentum. Line below signal, histogram below zero, but the histogram bar have been shrinking, suggesting bearish pressure is fading. Next is RSI around 55.7, just below the natural 50 marks but comfortably above the oversold 30 level. Weak buy momentum but nothing alarming. Williams percentage is reading around negative 51.85, right in the middle range, meaning no strong overbought or oversold pressure either way. It had actually touched close to the oversold zone below negative 80 before recovering, which suggesting selling pressure has eased, and the recent move upward shows buying interest slowly coming back, though not strong enough yet to confirm a new uptrend.
So what's the bottom line for KPJ?
Bollinger Band are neutral, showing consolidation. Moving average are bearish with short-term momentum. MACD is bearish to fading. RSI is neutral. Williams percentage is neutral too, telling us to wait for a clearer signal. Our verdict is hold for new investor. Wait for the stronger confirmation, ideally price breaking above resistance, moving above both the 21-day and 50-day SMA, and a bullish MACD crossover. For existing investor, holding is still the better move. There is no strong sell signal right now. Price is still above support and downward pressure is already showing signs of slowing.
Thanks, Afika. Alright, last counter of the day, and honestly it might be the most interesting one. Najwa, welcome. Let's talk IHH Healthcare. Najwa, give us the rundown on IHH first.
IHH Healthcare stock code 5225 is one of the largest private healthcare providers in the world, not just Malaysia, listed on the main market of Bursa Malaysia. Established in 2010, it owns well-known hospital brands like Parkway Pantai, Gleneagles and Mount Elizabeth, and operate across Malaysia, Singapore, India, Turkey, China and more. Everything from hospital care to specialist treatment to diagnostics.
You told me earlier this is the standout of the four. Why?
Because it's the only one that actually outperformed the market. From September 2025 to 50 June 2026, IHH gained 20.58% compared to the benchmark 11.89%. There was a sharp price increase in October 2025, backed by high trading volume, signaling strong buyer interest that kicked off a stronger uptrend than the overall market. And it wasn't just momentum, it was backed by generally strong FY 2025 financials, growth in both revenue and earning, particularly from Malaysia and India, plus a higher dividend announcement that further boosted investor confidence.
Strong fundamentals, but what's the trend looking like right now technically?
The stock was in a clear uptrend from September 2025 to February 2026 with a steady series of higher high and higher lows, but that weakened after February and price shifted into a sideways range between roughly 8 ringgit 50 cent and 9 ringgit 10 cents. As of our cut-off date, 50 June 2026, IHH was trading near the lower end of the range of 8 ringgit 54 cent, a slightly weak short-term position.
And the chart pattern reflects that sideways action too.
Exactly, a rectangle formation from February 2026 onward, bouncing between roughly 8 ringgit 50 cent support and 9 ringgit 10 cent resistance. It reflects consolidation after the yearly uptrend, buyers and sellers essentially in balance. Price sitting near the lower boundary does suggest weak short-term momentum. A breakdown below 8 ringgit 50 cents could signal further downside, while a breakout above 9 ringgit 10 cents would suggest the yearly uptrend is resuming.
What are the overlays telling us? Bollinger Bands and the SMAs?
On Bollinger Bands, priced at 8 ringgit 44 cents, is trading close to the lower band at 8 ringgit 58 cents, approaching a potential support zone after recent weakness. But it's still below the middle band at 8 ringgit 87 cents, meaning bullish momentum hasn't properly returned yet. Since price is still contained within the bands with no clear breakout and breakdown, the signal is neutral. The moving average are a bit more concerning. Price at RM8.44 is below both the SMA 21 at RM8.52 and the SMA 50 at RM8.73, and SMA 21 has actually crossed below the SMA 50. That tells us short-term momentum has returned weaker than the longer-term trend.
And MACD RSI?
MACD confirmed that weakness. The line is below the signal line, both are in negative territory, and the histogram is negative too. That points to bearish momentum and weak buying strength. RSI sits at 41.83 below the neutral 50 level, but still above the oversold 30 level, so buying momentum has weakened without the stock being technically oversold yet.
You said earlier there's a twist though. What's OBV showing?
This is the interesting part. Despite the price moving sideways, OBV has maintained an overall upward trend, meaning buying volume has continued to outweigh selling volume. That's a sign of ongoing accumulation. Big investors are still quietly buying even while the price itself isn't moving much. That positive volume trend could support a future upward move if demand keeps up.
So mixed signal, but one generally bullish, one hiding in there. What's the final call?
Bollinger Band is neutral, leaning hold. Double SMA is bearish, leaning sell. MACD is bearish, leaning sell. RSI is neutral, leaning hold. OBV is bullish, leaning buy on the back of the continued accumulation. Our overall verdict, hold. But out of all four counters, this is the one we are most excited to watch. It's still in a long-term positive position, but recent price action show weakening short-term momentum, and that rectangle pattern tells us the market's waiting for a clear directional breakout. Our advice: hold your position and wait for stronger confirmation like a breakout above resistance or improving momentum indicators before making any additional moves.
Great note to end the individual breakdowns on. Naili, you have been listening to all of four. Can you help us bring it all together for the audience?
I am happy to. Let's zoom back out. So this report covered the overall market plus 2 key industry and 4 companies on Bursa Malaysia. So over the period from 16 June 2025 to 15 June 2026, using purely technical analysis tool, the big picture, the FVM KLCI showed an overall bullish trend for the year, and all 4 companies were covered showed some form of positive momentum along the way. That gives investors the real opportunities, as long as decisions are based on the actual data, not just the gut feeling.
So, out of our 4, which one really stand out as the one to avoid?
That's the Fraser Anif FNN. Hands down, it's clearly showed the weakest technical potential and the only one flashing a genuine sell signal driven by significant bearish momentum across almost every indicator. For Nestle, KPJ Healthcare and IHH Healthcare all landed on a hold signal instead. Their indicators are more mixed, but there's real potential for future upside if we get stronger bullish confirmation down the line.
And if someone listening only remembers one thing from today, and what would you want it to be?
There's no single indicator is enough on its own, such as SMA, MACD, RSI, Bollinger Band, OBV, chart pattern. So these are all valuable tools for spotting trend, momentum, support and resistance, and also potential entry or exit point. But they work best combined together, not read in isolation.
Last one. If you had to pick just one counter to actually consider buying, which would it be?
Okay, based on everything we have walked through today, that would be the IHH Healthcare, because it got the strongest industry outlook out of the four company, the real potential for future growth, and it's already proven it can outperform the broader market. That said, we are not saying rush in right now, so we need to wait for confirmation of an upward breakout before entering the position. Overall, what this whole exercise shows is that technical analysis really is an effective way to read the market behavior and support investment decision. It's worked best as an ongoing process though. So we need to keep monitoring the market development, managing your risk carefully, and be ready to adapt your strategy as conditions change. That's how you get more informed, more sustainable investment outcome over the time.
That's it from the Advisory Desk for today. Thanks for tuning in and see you next episode. Bye!